Alright guys, welcome to Ebro Trades. In this video we'll be going over my 2025 revised ICT silver bullet setup. Now my last silver bullet video was a few months ago and it was really popular. I think it was my most popular video to date. A lot of you backtested that strategy and a lot of you used that setup to pass your prop firm challenges and are now funded traders because of that YouTube video. And so it's only right and it's only fair that, given that my whole motto is giving out my trading knowledge for free on this YouTube channel in exchange for nothing, I have decided to go revisit the ICT Silver Bullet, which is, one of my most trusted setups, and show you guys the updates, the tweaks, the revisions that I've made to the strategy for 2025, aka for the coming year. So 99% of the setup is the same. Few major additions have been made to the setup. Now, I'll make a sort of brief summary of how the strategy works just over here. So what we're doing is we've got, on the hourly time frame, on the Eastern Standard Time, aka UTC -5, we are going to go on the hourly time frame. We're going to look for the 9 a.m. candle. So this is the 9 a.m. candle just over here. So let's say that this is the 9 a.m. candle, aka the candle that goes from 9 to 10 a.m. in the morning. So let's say this is the 9 a.m. candle. We are going to wait for 10 a.m. to pass such that this candle closes, and we're going to immediately mark out the high and low of this candle. So this is 9 a.m. candle high and 9 a.m. candle low. Okay. All right. So once we've done that, as soon as 10 a.m. comes along, we are going to drop to the 1 minute time frame. 1 minute time frame. Now, the pairs that this works on, I've been using this predominantly on NASDAQ, on SPX, and on US 30, so predominantly on indices. However, I have backtested it on GBP USD, and it also works pretty well on GU. I haven't tested it on other pairs. Feel free to take this exact strategy, backtest it on the pairs, and let me know if it works for you and the success rate or the win rate in the comments. But I haven't backtested that. I haven't used it. So I cannot confirm nor deny whether this works on other pairs. But for indices, you're going to wait for 9 a.m. candle to finish. You're going to mark a 9 a.m. candle high, 9 a.m. candle low on the hourly time frame. Then you're going to drop to the 1 minute. Once we've dropped to the 1 minute, we are going to mark out that window, which is from 10 to 11, and we are going to wait for price on the 1 minute time frame to sweep either the high or the low of that hourly 9 a.m. candle. Now, once the high or the low is swept, we are going to wait for an entry model, an ICT entry model to form, and then we are going to enter a trade targeting the opposite level of liquidity. So if the high has been swept, we are waiting for a setup that targets the low. The low has been swept. We are waiting for a setup that targets the high. Now, let's say the high has been swept. We are looking for an ICT entry model. What does that look like? The most common is we're going to see a market structure shift from, in this case, bullish to bearish with a formation of a fair value gap, aka a displacement. We are then going to enter off retracement into the fair value gap, targeting the lowest hanging fruit, and ultimately the opposite level of liquidity. So essentially, we've swept the high. We've seen a market structure shift from bullish to bearish. In the displacement leg, a fair value gap has been formed. We could also mark out order blocks of significance. We are then entering off of retracement into this fair value gap, entering off the fair value gap. Stop loss just beyond the fair value gap or order block, depending on which one you choose to pick. And my risk reward for this is maximum first TP 2 RR. So your first take profit is 2 RR. Do not get greedy. The silver bullet is such a beautiful setup. The reason being, that it consistently works if you aren't greedy. Literally, just this setup right here, if you nail it with your backtesting, can easily bring in 3 to 5K a month, can pay off your bills. But don't get greedy. That's the key part of it. I'm not one of these fake, traders on YouTube, on Instagram, on TikTok that tell you, target 5 RR, target 10 RR trades. I don't. My first EP is usually, honestly, around 1.5 to 2 RR. Then if I see price action is okay, trending in my direction, I'll set multiple take profits down the line, but always take money off the table. Now, I hope this makes sense. Let's get into my example. So this is a beautiful, beautiful, beautiful example of the 2025 ICT Silver Bullet that I literally took on Monday. So 9 to 10 a.m. is the 9 a.m. candle. I'm on the 1 minute time frame. From 9 to 10 a.m. on NASDAQ, I'm marking out the high and the low. So you can see here, I've marked out 9 a.m. high. I'll just label this for you. 9 a.m. hourly candle high and 9 a.m. hourly candle low. Right, so I've marked out the high and the low. Then what? As soon as 10 a.m. comes along, we go from the hourly to the 1 minute time frame. Now, what am I waiting for? I am waiting for price to sweep either the high or the low. Right, what do we see? We see that price sweeps the low first. What does that mean? That means I am now looking for an ICT entry model that is bullish, aiming for the high. What does that look like? Okay, so I see. What is price doing over here? What is price doing? Okay, so I've got a high, low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, so price is bearish. What am I looking for now? I'm looking for a market structure shift from bearish to bullish, which means I'm now looking for price to form higher highs and higher lows. What do I see? I see price now forms a high, then a higher low, then a higher high. Okay, so we've got our market structure shift. This is our displacement leg. This over here is our displacement leg. Let me mark it out with the rectangle tool. This is our displacement leg, aka the leg of price action that resulted in price forming higher highs and higher lows as opposed to lower highs and lower lows. Within this displacement leg, do I see a fair value gap formed? Yes, I do. Here's my fair value gap. Here's my bullish fair value gap. Here is my bullish fair value gap, labeled here with the sky blue. Now, where is my entry? My entry, I literally set a long position at the fair value gap here. As soon as the fair value gap was formed, as soon as I formed this bearish candle, I'd set a long position here with my stop loss. Honestly, I like to be quite conservative, so I'll set my stop loss just outside the fair value gap and targeting 2 to 1 for my first TP. So my first TP was literally over here. So this was TP1 and this was the trade. And this was the trade. This was the trade. It's so simple. It's so easy. Marked out my low and high for 9 a.m. Soon as 10 a.m. comes in, I'm waiting for the high or low to get swept. Soon as the low is swept, I'm waiting for price to switch in market structure from bearish to bullish. As soon as I see that price is forming higher highs and higher lows, I mark out my fair value gap. I put my entry at the fair value gap and I wait for retracement into the fair value gap before going long. My first TP was at 2 RR. I also set further TPs at 4 RR. So I closed 50% of my position at 2 and 50% at 4. Honestly, I could have set higher TPs. You could have taken this trade all the way up to the opposite liquidity level. So if you're someone who, is a bit more, risky or has a higher appetite for risk, you could have taken this up all the way to 1 to 8. And even higher, you could have taken it all the way up to like 1 to 15 or something, But I'm a conservative trader. That's just my style. That's my risk appetite. It's what works for me. There is no right or wrong. It is subjective. It is down to preference. For me, I closed the trade off here and that's it. I was done for the day. This was my silver bullet setup presenting itself on Monday, the 23rd of December on the NAS 100. Next example was an SPX 500. Let's head over to SPX 500. What was the day and time? It was on, all right, we don't have the day and time, but I think I know where the setup is. Where is the setup? By the way, let me pause the video real quick and let you guys know that the one-to-one IBRO Trades Academy course and mentorship is now open. Link will be in the description. If you are someone who is struggling with being consistently profitable, I suggest you sign up. I suggest you sign up. Don't waste your time. Don't waste 3 to 4 to 5 to 6 years watching random YouTube videos, buying prop firm challenges, failing them, then starting again, then going back to YouTube. This is a path to profitability. I've done it. This is how I make my income. This is how I make my living. Sign up to the mentorship. You've got a course there that takes you from complete beginner all the way to my current exact strategies. And then the one-to-one mentorship for me to hold your hand through your mistakes. Literally, a call with just me and you once a week where I go over all of your questions, what it is you're doing wrong, what it is you're doing right, where are the issues with your strategy, what is it that we can fix, and how can we get you profitable. And if you are someone who's passed the prop firm challenge, or once we've passed your prop firm challenge, I'm holding your hand through being a consistently profitable trader. We've also got feedback on trades of all the members. We've got live trading session streams, which is something a lot of you have been asking for. We've got weekly market analysis and projections, and we've got guidance for prop firm challenges. I really, really, really do recommend this if you're someone who is serious about, treating this like an actual subject. This is not a hobby. This is not a game. It's not a joke. If you're someone who wants to take trading seriously, invest in your education, take the course seriously. It's a set of 25 to 30 lectures where I go over every single concept you need to know in depth. Don't go and watch ICT's videos where literally one video takes you like 10 hours. It's a perfect course. It's condensed. It's in one place. And then I am there to answer any questions that you may have. Now let's get back to the video. Link is below. If spaces are open, if not, there's going to be a waiting list below. So feel free to sign up. And let's get into example 2. So example 2, this is the silver bullet on the SPX 500. Let's head over to this example. So example presents itself just over here. Again, same thing, exact same thing. I put a line at 9 a.m., put a line at 10 a.m. on the 1 minute time frame, just to show myself what on the 1 minute time frame the 9 a.m. candle price action is, then mark out the high and the low within this hour. As soon as I enter 10 a.m., I'm waiting for the low or the high to get swept. I see here, low gets swept. I form lower lows and lower highs. Lower low, lower high. Lower low, lower high. Sweep the price. I am now waiting for a change in market structure from bearish to bullish. As soon as I see a lower high, then a higher low, then a higher high, I know market structure has shifted from bearish to bullish. In the displacement leg, which is here, where is my displacement leg? Is that your question? Where's my displacement leg? Here's my displacement leg. Oh, here is my displacement leg. It is the leg, it is this bullish leg that caused price structure or market structure to change from bearish to bullish. Why is this the displacement leg? Because prior to this displacement leg, I was forming lower lows and lower highs. I have now started to form higher lows and higher highs. So I've changed from lower to higher. I've changed trend from bearish to bullish. Hope that makes sense. Now, within the displacement leg, what am I looking for? As per my ICT entry model, I'm looking for fair value gaps and order blocks. I see a beautiful fair value gap just over here, which I mark out. Here's my fair value gap. As soon as I see a bearish candle form, I can mark out this fair value gap. Then I immediately place my entry on the fair value gap. So long position on the fair value gap, stop loss just beneath the fair value gap, and I targeted 1 to 2 RR for my first TP, aka the lowest hanging fruit. I set my first TP at 2 RR and my second TP at 3.5. And that's me being honest. because I'm not one of these fake traders that's going to tell you, oh, I make five RR trades. I catch 1 to 10, 1 to 15. That's a lie. I'm a conservative trader because this is how I make my income. And that's it. Very simple trade. Again, the exact same thing. Marked out my low and high for the 9 a.m. candle. Waited for market structure to change from bearish to bullish, aka from forming lower lows and lower highs to higher highs and higher lows. Marked out my fair value gap. Waited for retracement into the fair value gap before going long, targeting 2RR as my first TP. I do have other examples here, but I'll only go over them if enough people ask for them in the comments. That's it for this video. If you are someone that needs assistance, if you are someone who in 2025 would like to make trading a sustainable source of income for you and maybe your family if you have one, or just for yourself, like to quit your job, start making a sustainable income trading, I do genuinely highly recommend my course. I'm someone who's traded at hedge funds, at big investment banks, and so, this is a great way to make a consistent income through it. And yeah, that's it for today, folks. I'll see you in the next video.